In the meantime, we also have a management joining us now. Healthcare Global Enterprises posted a steady set of numbers. The emerging hospitals witnessed strong business momentum while the margins contracted a little bit. To discuss this, we're joined by B.S. Ajaikumar, the Chairman and CEO of Healthcare Global Enterprises. Mr. Ajaikumar, good morning and thanks for joining in. I want to start by asking you about the cancer centers, which are up almost 14% this time in terms of a growth. Can you tell us how were the occupancies in this quarter? What's the average revenue per bed that you've seen in this quarter across your centers? And what kind of growth are you looking at for the rest of the fiscal?
Now, our occupancy now has in the mature center is over almost 68%. And in the centers which are emerging, it is also about 67%. So we are reaching our target of about 70 to 75%. And our ARPOP, ARPOP has also increased in the mature center to 41,000. An important thing is even our emerging centers have actually shown 35,000. So there has been a good improvement in both sectors, and we see that our emerging center will also catch up with the mature centers very soon. That is our hope. Probably in the third to fourth quarter, it will happen.
So for your emerging centers, the growth has been good, but it's come at the cost of margins. Your margins have come off to about 9%, and you used to do double-digit margins earlier. Any reason for that, and will this margin pressure continue in the second half?
Yeah, usually what happens is in the first quarter, the margin gets a little bit lower than the last quarter. The EBITDA itself comes down. That is usually 3 to 4. But in this quarter, our margin went down a little bit more because we invested quite a bit in talent in the first quarter because we have really brought in very good talent in Mumbai. And also our radiation replacement, but a little bit more time it took. Instead of being up in the first quarter, now it is up in the second quarter. As you will see in the second quarter number, there will be quite a significant improvement. And we are seeing that tracking already happening in July. So we think we will catch up in this second quarter on that. I also want to say that we have also made some acquisitions. I don't know whether you've seen that. We have been very happy to report we have acquired a major center in Indore. And this is one of the strategic centers in Indore, one of the largest private centers in Indore which we have acquired. And also we have completed, it is a CBCC center along with SRJ. We have also done acquisition completed as we had spoken last time. It was in the works. We have completed our HCG and CHR in Nagpur. So both of this will put us in a strong place in that territory. Particularly, it will be our entry into Madhya Pradesh. And it will complete our link completely in the eastern part, coming up to Madhya Pradesh and Andhra Pradesh. That was our goal. So this will add a further momentum to our growth in this region.
Right. Congratulations, Dr. Ajaikumar, on closing out both those two acquisitions, as you have said in the past as well. We've spoken to you about a couple of them as well. Now, I just want to focus on the emerging... Yes, I wanted to focus on the emerging centers, actually. When we had spoken a few months ago, I think we were talking about revenues. You had told us that it's possible that you do revenues of around 475 crores with margins of around 13% for this year. Is that on? It's likely to improve in quarter two, but do you see the margins go to early teens, maybe 12, 13%?
Yeah, definitely we see that happening if you're talking about emerging centers. I think for us, the emerging centers, for example, Borivali doing extraordinarily well. Where we had some issues, which we have taken a lot of corrective measures. Like I said, we brought in talent is in South Mumbai and Calcutta. Entire talent acquisition is complete. And I think we are now going to see significant improvement in both Calcutta and South Mumbai, which will definitely add to our growth of the emerging centers.
Okay, so 475 crores with 13% margins, you're sticking to that, right?
Yes.
Okay, the other factor is in the last couple of years, you've paid some consultant fees. Last year it was around 16 crores. The previous quarter, I think it was 4-5 crores. So in total, you spent around 20 crores. And that was likely to help the business structurally, cost savings and also improve the profitability. Are you seeing signs of that in FY24? Will we see some bit of those savings because you've already spent the 20 crores? So now we'll see some results from 24 onwards?
Yeah, we have invested quite a bit in operational efficiency. You're right, as well as in digital. We have done a complete analysis. Our digital market is improving significantly, and it is only the start. As you know, some of these things takes at least 6 months to 12 months, and we are in the middle of that. And our analysis shows that definitely there is an improvement in both aspects. And we will see that particularly in the third and most probably in the fourth quarter of this year, we'll see the maximum impact.
Okay, two very quick questions. One on debt. Your debt has gone up. It's almost at about 220 crores now. Would you be, looking at higher debt in the year to come? And second, any more acquisitions on the anvil?
Our debt definitely is still, compared to our ratio of our EBITDA to debt and all, it's very low. Our debt has always been around 120. Now it will go up a little bit, 150, sorry. It will go up by about 120 crores because of the acquisitions we have done, both in Indore and in Nagpur. But we are also looking at future acquisitions. As you know, some debt we can afford to take more debt because of the strong cash position we are in. And we will be looking at more acquisitions. And as and when we do, of course, we will inform you. And we are very actively looking at it.
Okay, actively looking at acquisitions. Hope to hear from you soon. Thanks a lot, Mr. B.S. Ajaikumar, for joining us on the channel. That is Healthcare Global.